Good afternoon, everyone. You're all very welcome to Thursday's US session open. So, obviously, recapping on the price action through the course of the day, and then also looking, I suppose, as ahead to the US trading session. So far today, kind of the narrative that we've had all week. Stock markets, equity markets have still remained fairly bid overall. When you look at the price action through the course of the week, we have said this week that we're not expecting too much volatility. We are expecting a little bit of pause. Compared to, I suppose, the momentum, the volatility that we've seen over the last couple of weeks, there hasn't been too much in terms of data this week. News, there hasn't been too much. There's just been the odd comment from central bankers, like obviously Powell yesterday, Bailey, Governor Bailey at the Bank of England as well yesterday, and many Fed speakers as well through the course of the week. So I suppose first things first, if we look at the dynamic today, just from a data perspective and a news perspective, as we said, we're a little bit light on the data this week. So again, I think that's factoring into broader volatility within the markets. As I said, tomorrow we do have GDP in the UK. We do have the Remembrance Weekend in multiple markets coming up Friday and obviously over Saturday. So we're not expecting that much this week. Overall, now, I suppose for the rest of the day, we do have Fed Chair Powell speaking at 7 o'clock tonight. We do have a couple of speakers between now and 4 o'clock today, between the end of the European Open. So I suppose from a news perspective, from a data perspective, it's really about watching to see if there's any of these central bankers, like for example Lagarde, who's speaking at 5:30 today, if any of them move the markets, broadly speaking. Otherwise, you're going to be left with instances where we have consolidated ranges back and forth, navigating kind of around the point of control. So this week so far, if we look at the last 4 trading days, you'll see now this is obviously the market profile for the S&Ps. If we just mute that for a second, you can see that overall the S&Ps for the last 4 days, the stock markets generally for the last 4 days have been fairly consolidated. And of course, if you go up to the daily as well, you'll see the range, the price action this week being fairly tight. Now, we're still a bit to the upside. We're still carrying a little bit of headwinds into the upside. But overall, indices have become a lot less aggressive compared to what they've been, as we said, over the last few weeks when we've had these massive surges in price action. So as we look at it today, the narrative that we've said pretty much since Tuesday evening and yesterday as well, focusing on the S&Ps around that 4,400 level was going to be key this week. We did come off it yesterday again. So Tuesday we come off it into the close around 43.90. We come off it again yesterday. We rallied into 230 yesterday. We actually sold off subsequently back into the range and back into the value lows from Tuesday. So if I bring this market point of control back up, you'll see it as well. Very clearly off Tuesday's point of control. What happens? We rally back into the range of where we were yesterday. And of course, today we're picking up a little bit of a headwind. So that's the narrative that we've seen in the indices for the last 3 days. We've seen headwinds obviously still tilted to the upside. That's the narrative of the video today. Stocks holding their bid. So they're still holding that bullish sentiment in the markets at the moment. You can see it across the board. If we look at the Dow Jones, we look at the Nas, very, very similar narrative across the board with consolidation over the last 4 days. This value area here around 34,100, 34,150 is where we've been most of the week in terms of value, with highs at 250 and lows around 34,000. So we've pretty much been in a 1% range for the last 4 trading days, which again highlights the consolidation that's in these markets. And as well, that bodes the argument of making sure that when you enter into the markets, that those rules of engagement are being met and not just taking trades for the sake of it, because there's been a lot of occasions, right? On the short term, you might get nibbles, but if you're, let's say, looking at the broader perspective, you're not really getting any sort of follow through momentum. So that's why we're looking for kind of clarity today into obviously another close of the week tomorrow. So that's effectively where we are across the board. So the S&Ps, you'll see it there. The Dow Jones, you'll see it there as well, fairly visibly. You'll also see the NASDAQ as well when we open it up now in a second. You'll see the NASDAQ has been fairly visible as well. Let me just remove this yellow area for a moment. You'll see for the last few days or so, the NAS has been incredibly consolidated between this 15,300 level and 15,350, with exceptions to yesterday, where again, we rallied into 230. We came back down, we took the lows of the range, and then all of a sudden price action migrates back up into the value area where we've been pretty much most of the day. So again, if you're looking to go long indices off of recent sentiment, we're really looking for those areas, those highs of the week being overwhelmingly broken, should I say, because at this moment in time, we're not getting that much over the last few days. We're still holding up relatively well at local highs. So that's why you just want to be making sure that the price action is definitively breaking out or breaking out, creating that apex structure back to your value area, holding the value area, and then starting to assimilate a secondary degree of bullish price action. That's the favorite setup that I tend to look for myself. And at that moment in time, we just haven't got either scenario hasn't really played out yet this week. So that's why it's important to be ready, be pragmatic in terms of the market dynamics that we're currently presented with. So that's the indices, just a quick look. I suppose the big mover this week has really been gold. So a lot of that gold bullishness of the geopolitical element has definitely faded. If you look at gold on the perspective, this region was the region of talk this week. Between 60-65 was the lows into the end of October, with 2010 being the highs. So we were in pretty much a $40 range. Yesterday, of course, we did break through the lows of the range. We have made structural lows within the dynamic of the markets. So now it's really a case of, well, we found a little bit of a break. We've broken through 1950 on the downside. We're back above it now. Will price action create a short-term recovery? That would probably be the favored viewpoint, because after we break structure, after the market dynamic is broken, you tend to get a relief rally back into the value area. So our A's and our V vector structures are fairly formulated with that. So that's why now you can see that kind of daily area there around the 85, because of course, if you were to bring in the market profile, you'd see that there's a lot of value area, not just on the day, but kind of in the broader perspective. There's a lot of value here between 80 and 90. So it looks like short-term bullish price actions coming back into play in gold, which would then obviously depend on how far we can kind of create on the upside pullback following that kind of 2-3 day snap of selling. So that's where we are in gold. In the FX side of things, if we look at the DXY just very, very, very quickly, I know we haven't seen too much in terms of the DXY the last few days. Again, we're holding above 105.50 on the lows of the DXY and under 106. So again, like with the indices consolidating, the DXY is also consolidating, and there really hasn't been that much at play this week. Now, of course, if you articulate that back to the euro dollar or the cable or dollar yen, of course, the dollar yen has again appreciated a little bit again off of weaker yen this week. But broadly speaking, the euro dollar has remained fairly range bound. The cable has remained fairly range bound in that kind of 120, 150, 122.50 level. And you can kind of see that there yourself, that kind of consolidation range between, as I said, 123, 122.50. And the euro dollar as well has been stuck. It's broken above 107 today for the first time since basically Tuesday. But overall, again, looking for the next wave of dynamics, because as I said, the euro dollar, the cable prices have been fairly consolidated, and that's been attributed by the fact that the DXY and broader FX markets have definitely had lower volume and lower price action quantities in terms of order and volume this week. And I think that's really something to look at as well in terms of the VIX, the volatility side of things, but also in terms of the volume. And it hasn't really been there the last few days or so. Also, as I said, the VIX, the volatility, we talked about the VIX for the last couple of weeks, particularly with those indices, the tailwind that's giving the indices. The VIX is still remaining to the downside. We talked about it coming back into 16s. We're comfortably under 16s now. It's moving back deeper into the range, and you can kind of see it there as well. The volatility is completely falling off a cliff, back underneath 15s as we are today. And that's the first time we've been under 15 since the middle parts of September, when the price action started to become a little bit more entrenched to the downside, where we had those really, really deeper declines in the stock market indices. And you can kind of see that there as well, with some of these deeper moves from up here. So again, that shows kind of where the volatility is currently in terms of reference of how the stock markets are generally performing. So you can use that as a barometer. As I said, the last time was around about the 21st of September. And where was the S&Ps on the 21st of September? The S&Ps was pretty much where we're currently at, roughly speaking, 21st of September. So again, that correlation between the VIX, the volatility side of things, and the performance in the stock markets are definitely going hand in hand. So that's a fairly good barometer to watch. In terms of the yield story as well, as we just head into 2:30, obviously something to keep an eye on there because we talked about it yesterday at 4.5%. We did have a little bit of a break underneath 4.5% temporarily. It has poked its head back above it. So again, like we talked about it yesterday, keep an eye on that 4.5% because, of course, if the VIX continues to the downside and we see that DXY break through 105.50 to the downside, and we see the treasury yields break below 4.5, that's probably going to give a little bit of support for the indices. So there's three confluencing factors underneath 105.50, breaking to the downside, giving that little bit of pressure again in terms on the dollar. Yields breaking through 4.5%, which is roughly around here where the cursor is, and the VIX, as we know it, continuing to the downside. So if all of those three things are moving lower, that should definitely play into the hands of indices and stock markets trying to break these highs. Now, whether they do or not is another story, but that is obviously the big question of the day as we see these indices hit very, very important areas in the short term. So that's why today indices, as we talked about all week, S&Ps of 4,400 is an interesting area to look at. The Dow Jones around this 34,200, 34,250 area. You can see the point of controls as well. And the NAS as well at this 15,350 level. Now, from the short-term perspective, if we look at the order flow in the day, I can bring in back in the platform shortly. You can see the point of control on the NAS is coming in around about 15,300. So if we go into the market profile here as well, let's see that clearly. Just make sure that sharing screen, should be able to see it from your side. You can see it there as well. So around about 300, this is slightly higher at around about 320, but that area, 20-point range is definitely kind of where I would be looking at today in terms of the NAS. So again, down here really is coming through at the European lows. So that's what I would look at there in the NAS to see if there's any sort of reaction from the point of control. And yes, as I said, we rallied through it into 230. We then broke underneath subsequently, and then we migrated back into the value area. So just be cautious of that as we approach 3 o'clock. If we look at the S&Ps as well, very, very quickly. Sorry, folks. My microphone just decided to drop. 43.83, 43.80 is really the benchmark. And of course, that comes in very, very nicely with what we have on TradingView as well. So keep an eye on 43.80s. We're selling off into point of control as we speak at the minute. So that should really be the narrative to watch through the course of the day. This 43.80 level. So we're around about 5-6 points above point of control at the minute. So keep an eye on that one. And then last but not least is our Dow Jones US 30, which is just that point of control as we speak at the moment. You can actually see it visibly on TradingView integration. It's actually pretty handy as well. So USA 30, Dow Jones, we are trading pretty much at point of control. And you can actually see the F prints have walloped off the POC right there. So that shows that there is a very, very clear recognition that the markets this week has been fairly range bound overall, but they've been fairly reactive to the point of control. So anytime we've broken away from it, it tends to comes back to it. And anytime we've broken underneath it, it tends to react off it as well. So that's what I would be just saying today into 3 o'clock, the next half an hour. Just keep an eye to see how does the price action react off it. So far, so good. We're holding above it. And it's an interesting element because, of course, if you look at the S&Ps, what happened yesterday, we sold off very aggressively Wednesday and it bounced off the point of control. And what happened then? Bounced off Tuesday's point of control, back up into the value area. So that's a really, really useful tool to add just to give that little bit of extra reassurance and confidence when markets necessarily aren't the cleanest, or as the other point is, where there's not really much volume to report in the markets. Other than that, in the European indices, obviously with Lagarde speaking later on, and the DAX and the Eurostoxx has followed US indices in terms of higher over the last couple of weeks. That's obviously something we've mentioned on a number of occasions this week as well. Which of course is something I'll continue to watch as well. And of course today, the Eurostoxx in particular has made another move higher, initially yesterday into the highs of last week or at the start of the month. And we've actually since broken on today. So that's a clue to see, well, what happened in the European indices, is that or can that be replicated in the US markets? Because of course, this is where we've been holding up. In the European indices, we've blitzed right through. So that's not to say it will happen. It's not to say it won't happen. It's definitely a clue because sometimes the indices tend to follow each other. And that's something that I'll be looking at today to see if there is any sort of breakout. But your narrative for that is weaker dollar, your VIX continue to unwind, And of course, treasury yields breaking through 4.5%. Again, if that breaks out through 4.5% again to the downside, that's going to give us a little bit more impetus to that, for that to potentially happen. So keep an eye on that one today. Other than that, there's not really too much else to report. For the rest of the day, as we said, there's a few central bank speakers, Lagarde later on, a few Fed speakers now in the next hour or so, and then Powell at 7 o'clock this evening. And then other than that, then tomorrow we're back for UK GDP figures at 7 o'clock in the morning. And we have Lagarde and Michigan consumer sentiment tomorrow, 3 o'clock. I suspect with the Armistice Day tomorrow in some markets, Veterans Day in the US, I suspect tomorrow afternoon will probably be fairly quiet for all intents and purposes. But of course, let's wait and see. Just let's wait and see how the price action develops through the course of tomorrow. So that's pretty much it, everyone. Trade safe as always, and just be kind of conscious of that. As I said, gold is also picking up as well, so that one could very easily migrate back into the 70s and 80s. So do keep an eye on that one over the next few days as well. All right, have a good afternoon, everyone. Trade safe.